What's good, y'all? It's HB Punch and Profit. It is January 22nd, 2025. We are going to break down some of the price action in the Nasdaq this morning. Beautiful setups that presented itself, but there was also a setup that was very high resistant and you got caught up in a choppy range. And we will go over what to do, how to manage your risk, how to manage your take profit when you find yourself in a situation like that, or a day to where it's seek and destroy or very rangy, right? This will help you with that. But before we get into it, like the video, comment down below, subscribe if you're new. It helps the channel, helps me provide you with free content. So first things first, what's the higher time frame narrative? We go into daily, we go into 4 hour, we go into 1 hour. It is bullish. I'm not going to get into the nitty gritty details of how I do my high time frame analysis until we build this channel and we monetize it. Then I'll start going into some of that stuff. But time is money, money is time. All right, so roughly at the 9:30 opening, we get an inversion. That's the second thing we'll be looking for, and we'll be looking for advanced market structure shift after we establish our higher time frame narrative. There's a bearish fair value gap right here. This massive bullish fair value gap not only inverts, but it also gives you advanced market structure shift, and you can enter in a variety of ways. It's at your discretion. The safe and conservative approach is to place a limit order after you get a candle close above or below the advanced market structure shift and wait for it to retrace. In this case, you were very fortunate because it wicked back into it and there was little to no drawdown. So it was only about 5 to 6 points of drawdown, and it was nice enough to come back and tap in and move up. Okay, so it's a very beautiful trade. Another way you can approach it, usually what I do at the 9:30 opening, I will place a buy or a sell stop. In this case, it would have been a buy stop. As soon as we tapped in, I would have been punched into the market and I would have made this nice move, and then I would have clocked out immediately, right? Hit my target, I'm done. Now, this offered you at least a 1-to-1 plus more if we put our stop at the swing low. As you see, it offered you more than a 2-to-1. It pushed up all the way up here. And you can hold for a trade like this, especially if you're confident in your higher time frame analysis. 150 points. And you don't have to keep your stop at the swing low. Like I always say, you can keep it just below the inversion, above it, close to the advanced market structure shift. Just realize the more you move that stop up or down, you're probably going to lose more trades, but at least you manage your risk. But it's how you want to approach the market. Another thing is, I like taking 1-to-ones. I don't like sitting through long trades. I like getting in, I like getting out. I have two kids, right? I like getting in and out of the market. I like the move to happen fast. You can get a sufficient amount of points. You will win more. Okay. But there's also benefits to having a higher risk to reward, right? In the long run. It's just all up to you. So that was the first setup. Very nice move. Let's go to the second one, which was right here. Very clean move, very low resistance. So we get our inversion right here. All right. Our advanced market structure shift just above right here. Bearish fair value gap overlap by a bullish one. You get that close over. You place your limit order. Very easy, very nice trade to be in. And the risk to reward is also solid. At least gives you a 1-to-1 if you put your stop at the swing low. Remember, do not over leverage if you're putting your stop at the swing low or swing high with this strategy. All right, and it offers you 1 to 9. It will probably push up for a 2. If not, it still offered you a 1-to-1. I don't know why you would want to sit through all that. This is a nice 38-point move off of 1-to-1 risk to reward. Or what you can do is tighten your stop just below the inversion, above it, however you want to do it, right? In this case, if you put it below the inversion, would have been a nice risk to reward. You got a 2 to 3. Okay, and that's good money. 25 points with one mini is, I believe, 10,000 a month. So you do the math. All right, so that was a nice trade that played out depending how you wanted to frame it. Now, maybe I'll look up here. I didn't see if there was a setup up there. I was done after that trade. Um, I'm not quite seeing. Maybe over here. Might be a trade, but we'll see later. Let's go to what to do if we find ourselves, we get our signals, right? We're going to zoom in on this one because this one's tough to see. There was a signal here, okay, and it happens within a macro. You get an inversion right here, roughly speaking. There's a bearish, let me mark it out for you guys because it's hard to see. You get a bearish fair value gap right here. Okay, we'll change that to red. We'll pull it across so we can see where it overlaps, and we get this bullish fair value gap right here. Now, why is it bullish? Because, well, why is it a gap? Because there's a volume imbalance. So we put that in there. Look at where it overlaps. So 1, 2, 3 bullish. Okay, 1, 2, 3 bearish. I know that's not easy to see, but that's where your inversion occurred. Not a clean one, but it did. You get your advanced market structure shift. You get your candle close above this blue line. You get tapped in, and what happens? Now let me change this for a sec back to orange. What happens? We go up and then we pull back and we fill this gap. Lots of drawdown here. Now this trade does play out in your favor if you keep, and this is the benefit of keeping your stop at the swing low. It gives you time to kind of improvise and figure out how you want to shake this thing down. It gives you, if you go for a 1-to-1, okay, it gives you 54 points ultimately. You got to sit through a lot of BS, right? Like this whole choppy range that you're stuck in, but it does play out in your favor because you're stuck within this range, right? And eventually it breaks out of that. But if you keep your stop at this swing low, you know it's going to hold for a certain period of time. Now, what I like to do personally, I don't like to sit through all that and wait for it to go up. What I like to do is if we don't have a low resistance move with little to no drawdown, I know that's a sign we're probably going to start chopping. So if we pull back into this inversion fairly quickly instead of moving up with low resistance, that means we're probably going to chop. This low is going to hold long enough for you to at least break even or scalp a little bit of points. Now it's up to you, once again, your discretion to figure out how you want to deal with that. If you get your signal, right, the inversion, you get that advanced market structure shift, but you pull back, you fill your inversion, that means this low is gonna hold for a little, right? You don't have to panic immediately, and it will hold long enough for you to at least get a break even, okay, or even a small little scalp. It does pull back here, right, and it goes back up over the advanced market structure shift 18 points. So you can at the very least find a way to break even, get out of the trade, or even scalp a few points off of it. You will get an opportunity. It will pull back up. It's just going to be up to you how you want to deal with the risk management from there. What I like to do is just barely get above break even, and then I'm out of the trade, and I'll wait for a cleaner signal to where I have to take little to no drawdown and little to no resistance, like right here, right? And boom, little to no drawdown, little to no resistance, it just goes up, and I'm there. So, or you can sit through it, right? But the point I'm trying to make is if you ever find yourself where you're in your macro time period, you get your advanced structure shift, okay, and then it pulls back and you have this deep pullback that hits your inversion. The beauty of having this stop is it will hold long enough. It gives you an idea of where the bottom or the top of the range is going to be, right? That swing low, swing high, but you can't be over leveraged because you can only take so much if you got a few minis on there or even one, right? So right there, oh, we pull back. I got my signals, but we pull back and we fill our gap or inversion. Okay, I need to look to break even or get out of this trade. Okay, so we pull back, we go up. Okay, roughly here, I may just get an instant order, get off the board. I made a little profit, a few bucks, right? And then we wait for our next signal. That's going to be clean because you will get these signals and it doesn't mean they won't work, but it means you're going to be sitting through some shit, man. And it means that you're going to have to be very patient and deal with the psychology of the trade. And sometimes the better thing to do is like, okay, I don't have to take a loss, right? If we pull back, I don't necessarily have to cut bait right here. But what I can do is wait till we pull back up and we break even, or I get a little scalp. So that's what you can do. Most of the time, that swing low or swing high, and that's usually why I put my stops. I go for 1-to-1s, is because I can have a higher win percentage and I can kind of improvise. If I put my stop, let's say, right below the inversion, right, I get stopped out. I'm down. Okay, I'm down. And that's not always a bad thing. Like I said, it's just how you want to approach it over the long haul. I don't like to lose. That's one of my things, right? So what I do, the beauty of placing my swing low here is that I can improvise out of this trade and get a break even or a small scalp for a profit. And then, okay, I got another signal, which was right here, and boom, I take that and off we go. So I don't have to take any L's. So that's the beauty of having a swing low there. That's why a lot of people didn't understand that. Like, why are you putting your swing low so big? How can you deal with it? Well, I don't over leverage. Don't over leverage anything that my account can't handle. Now, depending on your account, 50 points with one mini may be way too much, right? But if you have a big account and you're doing well, that may not be too bad, right? But if I were you, I would get on the micros just so you can get used to seeing these trades visually, build up the repetition and the visualization of seeing the inversion, advanced market structure shift, swing low, swing high, right? And seeing it over and over and over again until you got one micro, you're just practicing with that. You learn how to deal with the drawdown, you learn how to deal with ranges, you learn how to deal with sitting through the trades and holding, right? And then eventually you can graduate to bigger contracts. But that's why I personally keep my stop at the swing low or the swing high, so I can keep my win percentage a little bit higher. But like I said, you can always keep a tighter stop and just play the odds over the long period of time. You're going to lose a little bit more. But like I said, if you're consistent and patient over time, it will play out in your favor. So this is HB, Punch a Profit. Comment down below, like the video, subscribe if you're new. Peace.